Hey everyone, this is Alykhan and Ming from Volition Properties. We're here to talk about real estate investing and this morning's news on the Bank of Canada rate cuts. So I'll hand it over to Ming.
0.25% drop, right? It sounds exciting. Everybody wants rates to come down, but it's not really the most important thing. And what I want to talk about today is beyond, the rate's interesting, but what actually matters in all of this. Let's first start with the obvious. 0.25% rate drop. Yay, we get a little bit more money back in our pockets. Our variable rate mortgages are a little bit lower. If you're coming up for a rate renewal, you'll probably get maybe a little bit better pricing. But let's be real, 0.25% doesn't make much of a difference on your day-to-day. $50, $100, $200, maybe $500 a month, depending on how massive your mortgage is. But for most folks, it's not going to move the needle, right? It's not like getting this rate cut. It doesn't mean you're going to go change the way you live in any way. So while I like the trend, there's something that comes along with that trend, right? And I think the more important thing is the context of the announcement itself, right? Like the Bank of Canada, they could just put out this one-liner or tweet or X or whatever they call it, right? Like rate cut 0.25%, and then that's it. But they don't. They write this whole long-winded article about why they are cutting 0.25%. And I think that's the more interesting stuff. There's some not great things rolled in there. You've got GDP is down, exports fell, employment's at 7.1. I mean, that's older news. And the context, as I interpret it, is they're cutting rates because things aren't that great right now. There's tariffs looming. That's not looming. They're here, but the resolution is not. And I think by now, a lot of people were hoping we'd be at some sort of agreement with the US, and that is having impacts on our economy and their economy. So the signaling of these rate cuts is tied in with we're not super confident about the economy. And I actually think that's the much more important message because, let's tie this back to real estate. We have an investor mindset. Oftentimes that means acquisition. Maybe you're upgrading your personal residence. Maybe you're looking for something where you can rent with a basement. You're looking for straight investment properties. You're doing a 4+1, whatever it is. Looking at economically, does it make sense for you to go buy? Does it make sense for you to grow your business in real estate? The rate cut is just one data point in isolation. You have to look at the greater picture. And it is absolutely a great time to buy if you have the personal/business resilience to make it through a slower economy, right? We're actually going to have a video later on talking about why you shouldn't buy even though it's a buyer's market. That may apply to you. For the vast majority of our clients right now, they are transacting. We've done more volume in the last year than we have in many years before. We just won the highest award that our brokerage gives out. So our clients are taking action. They are buying. It's 89% of our business right now is acquisition. So what will a slow economy mean? I mean, it could mean continued price reductions, right?
Right.
So it might continue to be a buyer's market. I think we'll see what happens.
What I'm hearing is there's slight relief for borrowers, right? But how does this shape the upcoming fall market? Because there was some news on that as well.
Yeah, that's a great question. I mean, if you've been active in the market like we have here, you've been seeing a lot of offer dates being put on properties recently. But why? That would not be the listing strategy I'd be using at this point. There are absolutely certain hot pockets in the city, but the vast majority, 90%, is not that place where it is extremely highly desirable even in a down market. So I think for the fall, if you're listing and you were perhaps thinking about an offer date strategy, it's likely not the right strategy. Of course, it's a property by property thing, but in most cases, it's not the right strategy to take right now. But if you're buying, now is the time to kind of make a couple of unreasonable offers, especially if you're looking at buying a condo for personal use, not for investment. But if you're looking to buy a condo to live in, this is the market for unreasonable offers to kind of find out who it is that really needs to sell. There are some folks, unfortunately, which are in positions which they need to sell those condos. And, our clients are taking advantage of that right now. So I think this fall market won't be the big bounce back that I think some folks are saying it will be from a rate cut. I don't think it's enough to bounce back a whole market when the economy as a whole is slowing.
Great. Thanks for tuning in to Volition Properties, everyone. This is Alykhan and Ming. And if you enjoyed today's episode, be sure to subscribe and follow us and share this anyone who you feel may be interested in learning more about real estate, and keep learning, keep building, and keep growing your real estate knowledge. We have a meetup every month, and we look forward to seeing you there. Thank you.
Yeah. These days you can like fake everything with AI, so do it, go real life, and come see us IRL, as the kids say. Thanks very much, everyone, for joining us. Thanks, Alykhan.
Thanks. Take care, guys.